focus on the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I hope you had a wonderful day. Today was absolutely crazy, and what I'm about to share with you is wild. Literally, it has to do with Netflix. Their earnings came out, and some people are calling it a success, but here's a direct quote from the earnings call. They said it is tough losing 1 million subscribers and calling it a success. So there is already a couple of analyst upgrades that came out, and a lot of people are saying the narrative of not getting worse, that's kind of the good part, but now this is the crazy part I want to share with you. The dollar is about to be insane. Well, actually, we already saw the effects. So think about how much we've been talking about the dollar, how the market has moved. We are now finally starting to see it with earnings. A couple of companies guided down. Anybody who did guide down, they had a strong impact from the dollar, meaning they were pretty much doing over 50% of their revenue in foreign sales. So that's not good, because if you have to convert it back to the dollar and the dollar is strong, you end up losing money. But the point is now we're starting to get some effects that we can quantify. But here's the crazy part. This is from the Netflix earnings. You can see what they said, and they said that their third quarter guidance, the growth factor of 5%, that would translate into 12% if they were on constant currency. But since currency has moved and the dollar strengthened, they have it at 5. So what does this tell you? Well, 5 to 12% difference, that's about 7%. And if you go look at the dollar in the last couple of months, or at least even from January was the last time Netflix took a metric of the dollar, it has moved up about 5 to 7%. So what this is telling you is that next quarter, if Netflix does exactly the same and they meet their guidance, but the dollar goes up 5%, chances are they're probably going to report negative growth. And then vice versa, if the dollar comes down and Netflix or any other company that does a lot of business overseas and would get affected by this, they would actually benefit when the dollar starts to come down. So this is very interesting. It's going to affect a lot of earnings. And even today, the Netflix move is huge. If you didn't see it, Netflix is up right now 15% on the day following the earnings. And if they close green or open green tomorrow, that will be the first positive earnings for Netflix since January 2021. So absolutely wild. We got a lot to talk about. This dollar theory is going to come up. We could find a lot of good earnings plays if we keep our eyes open. And really, we have a lot we got to deal with. Today was definitely a risk on day with every industry doing good. So we got a lot to talk about. I got the plays, I got the keys, everything for the rest of the week and even earnings. So drop your thumbs up on the video. Make sure you subscribe. YouTube.com/the stock market. I already took too long explaining that, so let's get right into it. As far as the keys, like I said, today was just a good day in general. The optimism was real. You had good news out of Europe regarding rate hikes and stopping inflation. That helped bring the euro up, which dropped the dollar. Then you had the Nord Stream headlines. At first it started really negative, then middle of the day Reuters came out and they were like, well, it looks like Nord Stream 1 will come back online. If anything, it might have a lower capacity, but people took that as positive. Those were two very good pieces of news, and they brought the dollar down, and that was a big thing. But then all of the earnings we got, they've been pretty good. Essentially, any big guy down had a big dollar effect, meaning more of their profits, or above 50-60%, was coming from overseas. But besides that, you didn't watch the business activity drop too much. And even on top of that, just part of the bullish attitude today, every industry was green. Everything did good. Safe havens, non-safe havens. It didn't matter what it was. It was just one of those days where even commodities and energy, they did their thing. They didn't necessarily plummet, but every industry was doing good. And really, it was just a sense of risk on, especially considering how we felt yesterday and then the news got in the way. But so far, earnings has been good. Not too big of guide downs, or even if the earnings aren't necessarily the best. They're not getting worse, and that's what some people like. But overall, today was a very bullish day, and it is definitely getting us in that earnings mode. So keep that in mind. But now that is the second key right there. We have more earnings to react to. You're going to get a couple of names in the morning. You're already getting some big names. You're going to get Tesla tomorrow. We're going to see the follow through here with Netflix, and all of this is great. And I want you to be prepared for earnings season and earnings mode. Again, we've seen how the market operates kind of the day of some of these big earnings. It gets really, really active, then it calms down, and then everything is kind of pushed towards the next move the next day, and then reacting to the broader stuff, analysts, and then the sympathy play. So keep all that in mind, but you have a way bigger earnings week next week. So today's big, or this week is big because some of the companies and industries, but next week you have way more market cap dollars reporting. So we'll see what happens. But as far as tomorrow, just keep your eye on earnings, get ready for those, the continuations. And now you're also going to be getting real estate data. We've gotten a lot of home builder data this week, and it has not been good for real estate. So we want to see what's going on with the consumer. Existing home sales tomorrow, that one could cause a big move depending on if it is a big miss or a big beat. People are really going to start jumping to conclusions and again trying to tie them into the macro situation. And on top of it, today was bullish enough where 100 basis point odds on Fed futures, they dropped, dollar was down, yield curve came up a little bit but still inverted. If anything, this was just a day for the equities. They were able to do their thing because we are in earnings mode. So that's the second key. Finally, last but definitely not least, the bullishness can continue. Again, it depends on earnings. It depends on some of these factors. Assuming the Europe news doesn't turn sour by the end of the week and no big guide downs or grim reapers hit on earnings, the bullishness can continue. We brought this up the other day, literally 3-4 days ago. You were at 372. Today, you're at 392, man. That's a 20-point move. That is absolutely huge. So we're going to see what happens, but don't talk to me about a bottom just yet. Let's talk about 410, 415, and getting back up to that level, seeing where things are at. And remember, last time we were at 415, that is where the Fed said equities are still overpriced. So keep all of that in mind. But that's the big rundown. That's all we had today. Again, it's going to be all about earnings and seeing some of those factors. So we will see what happens. But let us get into the plays. So, right off the bat, I got a couple of different plays. I made a play on two of them, have a play on one of the other ones, and this one is going to relate to the dollar theory, but let's start with the first one, Shopify. I made this play today, and it went down a little bit, but why I'm putting this up as the first on the list, because I didn't look at how it closed. It closed up near the top, and that is a very good sign. They closed up 8%. Shopify really hasn't had a big move since the split. Again, if you haven't noticed, Shopify's at $40. It is because they had a stock split a couple weeks ago, so that was part of it, but they were reacting to good news today that they're going to be able to integrate with YouTube and allow more content creation sales through Shopify. So overall good news. The stock was up 5% at open, came down to only 1%, and then closed up around 7%. I was like, that's a really good sign. My premiums even ended up closing green, so I like that. As far as the play, I just grabbed a next week 39.5. That's pretty much where the price was at before it came down. It cost me 70 cents, so kind of on the more expensive side, but still below $1. So we will see what happens, but I definitely like that play, especially if we see some of this risk on attitude continue. So that's the first play, but as far as the second play now, EWG, baby. I finally got to make my play. I said I'm playing this game of chicken, and people were asking what that means. What I'm trying to say is that, hey, I wanted to put a play on Germany to the downside before we get any of the Gazprom news, but given the way the ETF works and what we've seen, I just know if I'm wrong on one day, it is going to cost me a lot. So what I mean by chicken is I wasn't going to add a play until I saw the premiums get crushed, and really, they haven't been crushed. Premiums are still expensive, but I called into TD Ameritrade. I said, get me on that hard to borrow list, and I just decided to short 500 shares of EWG. So I shorted it at like 22.79, I think, this morning, and the stock was already up 3%. Again, that good news out of Europe, Italy, Germany, they all started a run at the open, so it was already up 3%, and then more news came in. It rallied up to like 4 or 5%, but best part about that play is that being on the short shares and then by grabbing calls for insurance, it looks like I got blown out on 500 shares. I only lost about $93. So what I did, shorted the shares. I bought 10 of the January calls. Again, I want more time than not. And even with EWG, I'm eyeing the January plays. Why? Because no matter what happens with this, chances are we're going to hear something about energy in wintertime for Europe. So keep all of that in mind. But I went through with the play, and really, I'm just going to be holding that until I could see premiums go down, and then hopefully I could get a play on the options. Why do I want to play the options still? Because this is enough to give me exposure, but like I'm showing you, even a big move, it's not costing much. So even if I caught a 5% move down, I would have probably only made like $200, $300. So it's not as if it is too big of a move, and that's kind of the problem. If we are going to get a real black swan or even that flash crash, I'm going to want more leverage, but right now the premiums are just way too high. So keep that in mind. That is the second play. We got back into EWG, but now we got a little bit more flexibility. So that's number 2. As far as number 3 now, Qualcomm, baby. So this one is going to be very interesting. I misread this one on stream. I thought 90% of Qualcomm's revenue was coming in the United States. No, this relates to the dollar, and they have 95% of their revenue coming in from overseas. So you should check out the stream after hours when the Netflix stuff was there. We were going over it, and we had a little mini lesson on it, but this is a lot of risk right now. Again, 60% of it comes from China, and they didn't weaken as much as other places, but this one is just very, very simple. If the dollar goes up and it's already gone up, that could really, really kill their earnings, but now you can check based on the guidance. So we talked about this a little bit on that little lesson, but essentially some of this has to be priced in on Qualcomm. Again, most of their revenue is coming from overseas, but you could generally get an idea of where they see the dollar at, but you could also check their guidance on how much they expect to lose. But pretty much the dollar moved more than a lot of people expected. The question is, do the estimates match it? So that being said, I like this play for the downside. We already got our puts, but I still want calls. Again, I want to play the pre-earnings run up a little bit, and that's the best thing here with Qualcomm. No matter what happens, their report comes out like in a month from now. It's a little bit later, so we still have time, and I want to take advantage of the sympathies and playing both sides. So those are the main plays. That was pretty much it. As far as everything else, I did do a Netflix Iron Condor. We were talking about it all day today. Remember, I had those 2 free Netflix plays, had a free call, free put. Again, no matter what happens, I was going to walk away a winner, but we were talking about the premium, and I said the premium's just very high. I didn't think it was going to move. We've been talking about premium. I was like, just let me finally do one and make sure the max loss isn't too big so I don't get clapped, and I did an Iron Condor. So what the Iron Condor is, you can see here, I shorted the 275 call, and then I shorted a 145 put, and then we bought the options right above it. That makes sure that I have a max loss no bigger than $5 a contract because it's $5 a share. But here's the idea. By shorting these contracts, my pretty much play was saying, hey, after earnings, Netflix won't go higher than 275, and then it won't go below 145. And since the premiums were so high, I felt like I could get more money, and if those contracts expire worthless, I walk away with money. Now, in this case, only $122 upside. If I'm wrong, I pay $800, so that's kind of where the skew comes in from, but thought it would be decent. I made that play, and then I also grabbed the CLX in the day. We did a weekly. I grabbed these 155 calls at 11 cents. I sold one of them at 30 cents. I'm holding the final one, but there was news about like an activist investor or a vote for Clorox. It shot up and stayed up, and again, just with all the industries, I think that was good. So there was that, and then I sold out of a Morgan Stanley that we got from earnings. Remember, we had 2 of them, made I think a couple $100 on the first one, sold this one out at 50%, called it a day, and then riding everything else. So keep your eyes out for all of those. As far as anything else I'm going to be looking at, XLV, I made that play yesterday. It got washed. It came back today. I really, really like that one. So keeping my eye on that. Keeping my eye on Tesla. The puts came down a little bit today, but they're still elevated. So hopefully before earnings, we could get a call. But you notice today with Netflix, even pre-earnings, even until the end of the day, the premiums did not start moving in the morning. So got to be careful on that. But just going to be watching that, going after some of the sympathies. Definitely going to play Netflix tomorrow as well. And then seeing where things take us and if any data can move it. But just playing the earnings season, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, don't betray the future self. You gotta stay faithful. Keep the goal in mind. It don't matter if you're happy, sad, anything, because you have something to stay faithful to, and keep on the mission. You are on the right path, baby, and hopefully you bask in all of the earnings season opportunities. But Chad, I love you. Drink that water. Stay hydrated, healthy. I'm going to see you in the morning. Come with that energy and get ready. We are almost at the end of the year. And by the end of this earnings season, oh, you are going to learn about macro. You're going to learn about the dollar. And then you really going to see what's up, man. And get ready for the long term. Okay, but I love you. Chad, be safe. I love you. God bless the Cole. I don't want to leave. I just love you. I don't want to, is this weird? I don't want to leave. Stay humble. Honestly, this shirt is like so old. If you see, I wore this at 1.2 and I looked a little bit weird when I was wearing it, but now this one's just not ironed. I haven't worn it in a while. And then my friend's mom watched one of the videos and she's like, listen, Josh, I like what you're doing with it, but you got to iron them shirts. So now I'm really self-conscious. But I said this at the end, so I don't know if someone's going to comment it before, but like, we'll see. I'm talking with my hands a lot. They were like, Josh, stop talking with your hands. You want to talk like this? Oh yeah, you want to go over the keys like this? Is this good for you? Is this what you wanted to see? Why am I still going like this? I don't know, but now I'm trying to not move my hands. So Chad, I'm just going to lean in without moving my hands and tell you that you're loved, you're blessed, you got a purpose, and now you have a good night. Okay, bye. I'm not going to move my hands to end the video.